Wes-tone here. We're going to do an update on Kaspa. Today is December 9th, 2024. So quick update on the cycles theory. So our previous theory was that we had a power law that looks something like this. And we thought that, so here I've mapped out the Bitcoin and altcoin seasons. This is the Bitcoin 4-year cycle, and this is the altcoin outperformance cycle. And I thought maybe Kaspa was starting to synchronize with some of those broader cycles, developing a low frequency cycle where we had a period of outperformance in this area. Now we're starting to see a period of underperformance followed by a period of overperformance that starts to synchronize with the broader cycle. I'm beginning to think that that theory is not necessarily what's going to happen, primarily because here at the bottom we have basically a trailing 20-week correlation coefficient. So this is how correlated the price has been for the previous 20 weeks. Correlation between Kaspa and Bitcoin, and you can see that since June we've had absolutely zero correlation averaged out since then. A value of 1 would be a perfect positive correlation. A value of -1 would be a perfect negative correlation. We're at 0 since June, so that tends to make me believe that we are not, that Kaspa is its own thing that's completely uncorrelated with Bitcoin or even the broader altcoin market. So if I change this to the others market, which is kind of a measure of the broader altcoin market, we also see here that over the long term, it seems to be virtually not correlated very well at all. We've had a few periods where it approached high correlation, but they did not last for very long, followed by periods of negative correlation. So for practical purposes, it's interesting that it's not correlated at all, which could be a good thing for a portfolio potentially, to have kind of a uncorrelated asset in the crypto world. You could have your Bitcoin allocation, your altcoin allocation, and your Kaspa allocation to create a fairly balanced portfolio. Not financial advice, just all that is to say that the cycles theory, I don't know if I'm kind of losing credence on that one. So we also want to do an update on the power law. Been studying, doing a lot of deep diving on the power law. It's not an area of my expertise, although I feel like I'm beginning to understand it better now. I did have a couple posts on X where I did some analysis here. The big debate in the power law community has been about the origin date, or what is the origin date of the power law. When does the power law start? And Chancellor did an excellent article on this, explaining the importance of the origin date and how that would affect the look and the scale invariance. The rainbow chart that everybody looks at uses the genesis date of November of 2021 as the origin date, but there have been some studies and whatnot trying to figure out if that's actually the best fit. There were some protocol changes in May of 2022 that seemingly affected the trajectory of the price and the power law. And I attempted to do a study here with my mediocre skills to determine which would be a better fit. Here we have the November start date, and you can see that the fit isn't that great because it's sort of under the trend here, and it's starting to go under the trend here. This is the May 2022 start date, which has a much better fit. It's got a slightly better R-squared value, and if we plot the residuals, which is basically the variance to the trend line, if you think of the red line here as the power law trend line, this shows the variance from that trend line. And this is the May model, which is centered about the power law much better than this, which seems to have a more curved look to it, which is what Chancellor describes would happen with an incorrect origin date in his Medium article. So I'm kind of giving up on the November start date, origin date, and moving to the May origin date. Here's my most recent charts on that. So here's my power law, which has an R squared of 0.947, which is very good. And what I did here was this is similar to the residuals chart, but this is showing the percent deviation from the trend line. And this should be theoretically centered as perfectly as possible right around 100%, because 100% is that the actual price equals the trend line. If I do a linear regression on this chart, it should be perfectly centered around 100%, which it happens to be so. If I do an R squared analysis on this linear trend line here, I managed to get it to 0, and it is kind of finicky one way or the other, so you want to get it as close as possible. And when I add new data, this does change a little bit, but right now this is about as perfect as a fit as I've been able to find. And the key takeaway here is that if you use the incorrect origin date, the scale invariance is going to break down. And it's probably not going to break down instantly, but it's going to break down over time. And this is what that would look like. This scale invariance means that the power law is no longer a straight line on a log-log chart. It starts to veer off sideways or just not fit that perfect line anymore. And that is kind of what this shows here, is that it's kind of got an arc to it. Another interesting thing we can do is we can take Kaspa's price and divide it by Bitcoin's price. And we also get a very strong power law if we do that as well. If I do that here, we get an R squared value of 0.91, which is slightly less than Kaspa's and Bitcoin's power laws by themselves, but still very strong, objectively speaking. If I do the same deviation from the trend line here, we get kind of a similar looking arcing pattern that we saw with the November start date with Kaspa, which tells me that scale invariance is possibly starting to break down. I don't know if we necessarily have enough data to make that statement confidently, but that's what it appears that it's starting to do. In which case, the R squared value would deteriorate over time, and we would start to see more of a flattening of our ratio. But if I run a linear regression line on this deviation chart, we still get a very nearly perfect fit there. So it kind of remains to be seen. Going back to Kaspa here, assuming our perfect power law trend line holds up using the May 2022 start date, it illuminates a few interesting points. One being that if we extrapolate this outward, we would not see a 1 trillion market cap in Kaspa until 2049 or 25 years from now. It would also imply that the Kaspa Bitcoin ratio is going to break down and essentially go sideways from here. So I'm not really sure how to reconcile all that. In other words, the scale invariance of this power law would also break down. A couple other interesting points that I think are worth sharing. I always like to check the Google Trends to see what sort of new people are coming into the markets. People Google searching Kaspa is a good way of testing that. And we've seen really pretty phenomenal growth in search volume just in the last 2.5 years. And you can see recently we've broken out this week. This dotted line means we're actually breaking out in terms of search term volume. But I find this actually to be a little bit concerning, and let me explain why. Every time search volume spikes or breaks out, it corresponds with a price breakout, as you'd expect. So for instance, we had a breakout here in March and April of 2023 and also in November of 2023. If we look at that here, that corresponds to here, March and April of 2023 when it broke out, and November of 2023 here where it broke out, and those are some pretty significant, violent moves to the upside. But right now, the search term volume is breaking out, and we've seen only this kind of, it's a move from 10 cents to 18 cents, which is a significant move, but it's far less significant than the previous moves. And if we zoom into this, I'm watching this 18 cent level because 18 cents has been resistance multiple times in the past. So we did break out of 18 cents, went up to about 19 cents, and then this morning the broader market was down some, and that pulled us back below 18 cents. So I'm going to really be watching this 18 cent level because if we can't sustain a breakout above 18 cents, I'm going to be a little bit concerned, especially given the breakout in search term volume. So if we do manage to break out of 18 cents, I'll be looking at the 20 cent level, which is its all-time high. If we do not manage to break out of 18 cents, I think it's possible that we could return to our power law support is actually about 13 cents right now. If it breaks 13 cents, I'm going to become very pessimistic, and then 10 cents would be the next level below that. And if 10 cents doesn't hold, we shouldn't even see 10 cents given any power law model right now. So on the downside, that's kind of what I'm looking at. And what this looks like to me is that, okay, we've got a breakout in search terms. We don't yet have a price breakout or even that dramatic of a move yet. That looks like dilution to me. Going back to our discussion about transaction fees and the massive increase in transaction fees we've seen since July and especially September, this means miners are pulling in more revenue for the same capital expenditures or mining hardware. So that definitely could put downward pressure on production costs, and that was kind of our whole theory and discussion around what was going on with the power law breakdown. You can see some of the previous videos for that. So far, the May model has accounted for that, but we don't know for sure if that's going to continue to hold up. So again, we've got this breakout in search terms, which should give us a much more significant move than we've had here, but I think it's possible that we've had this downward pressure on price due to the dramatic increase in transaction fees. So that actually is concerning to me, and I will be very much watching closely. Anyway, Wes-tone here, and we'll see you in the next one.